Well, we've got a mixed market on Thursday, but stocks are still looking at one of their best Januaries on record. So what does the heart of earnings season coming up in the next few weeks have in store for investors? Larry Shover is the CIO at Efficient Advisors, and he joins us now. So Larry, let's just start with the overall outlook for the equity market, what we've seen in the last 4 weeks. How surprised have you been by that rally? And given the speed at which we've recovered so much of those losses, where do you think we're headed over the next few weeks?
Yeah, I'm always surprised with the bounce back, with how quick it is, but it just seems like, I'm not sure why I'm surprised, but it seems like it happens all the time. I mean, the macro issues that people are worrying about are definitely real, but I do think that the market, and especially December, the sell-off was just overdone. And with that in mind, the issues are still at hand, but the market's bouncing back, just trying to find equilibrium, focusing on earnings season, which in my mind has been fairly sturdy so far.
So given that the issues are still at hand, as you say, and in fact, now we have even more issues than we had in December. We have a shutdown, the longest shutdown that we have ever had in this country. Yeah. We have Wilbur Ross, the Commerce Secretary, coming out today and saying we're miles and miles away from an agreement with China. So given that, even though we're in earnings season, it seems to be going okay, given that we have those overhangs out there, I mean, where do you think people should be going for safety or looking right now?
Well, I think what they should be looking at is the earnings season. And why I say that is that the S&P 500 forward earnings consensus back in November was $178 a share. In December, that dropped by $10, and currently we're looking or hoping for about 172 or 173. And that's why we're getting this sturdy rally that we've seen over the past couple weeks. And even today, I mean, the market's like not doing badly. So with that said, the market already has digested China, even though seems like we're miles away. Doesn't seem like it cares about the government shutdown. The market seems to care about things like show me something new, put it that way. And it's kind of baked into the market already, because I tell you, if the China issue was resolved in even a neutral way, we'd be trading much higher than we are today.
Larry, I want to ask you a little bit about the oil market, the action we've seen there. Obviously, a big sell-off in oil at the end of last year. Where's the outlook there? And I guess, how much do you think what the price of oil does from here? I mean, we got some more news today about crude stockpiles likely remaining elevated for years. How much do you think the equity market is going to be impacted by the price of oil going forward? And where do you think the price of oil is headed?
Yeah, that's a great question. I think the correlation between the two has been very fluid since like December, and it continues to be so. I mean, it is true oil's up 1% today and the stocks aren't, but the fact remains it seems like that whole risk-on environment is in tangent. That said, there's a lot of macro issues that are old and tired, but they're still really relevant, like demand growth. Will it continue to be as good as it has been over the past 3 years? We have Iran sanctions number 2, starting in May. I don't think the market's even looking at that, but that could be a huge issue. We have IMO 2020, which is new regulations placed on the maritime industry, which could have gigantic implications to especially middle distillates and the refinery standards. All that to say, I still maintain that oil, WTI, is going to be $52, $58 a barrel between now and the end of the year. Anything higher than that, there's got to be a good reason for it, but I can't see it right now.
Is Venezuela a good enough reason for it?
You know what? I thought about that, and definitely an issue of why it's going up today. And boy, I'll tell you, if you look at my track record, I'm always eventually right about oil, but boy, it takes a long time. It takes a lot of pain. But the Venezuela issue definitely is something worth noting. But there's so much going on behind the scenes, and we saw that last year, even in Libya. That was a big issue that people were worried about, and not realizing that the issue is no worse than feared. And so it's not like I'm being half full or half empty. I think it's just so complicated, so intricate, that I don't think one driver itself, especially Venezuela, is going to drive the market.
All right, Larry Shover, thanks so much for joining us, and we will talk to you soon.